You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so it's definitely time for an update on our past full breakdown of Euro NZD. So today I will be showing you where is the next opportunity for this pair, since the market just completed exactly the two patterns that we had spoken about in our previous analysis on the pair. So now it's time to make an update to show you how we can be looking for the next opportunity for the pairs to obviously be capitalizing on them. Now, as usual, I will keep the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective. So what institutions are doing on the Euro and on the NZD. So we will be checking the commitment of traders, which is what hedge funds are doing in the market. And obviously, if you're able to read what the biggest banks and institutions are doing in the market, you can trade alongside them and you do have an advantage over your competition in the market. And by the end of the video, you will know exactly what kind of opportunities we can be looking for on this pair. So the video will be very educational and obviously practical. Now, starting here from the monthly time frame, what we have is a market that has just tested a quite strong support area. Now, this bullish trend line started here, was again tested here, and the market has just confirmed it as a very strong support zone, creating this move to the upside. So on the monthly, we are testing currently support. Going down on the weekly, what do we see? Now, from a weekly perspective, we can see that we have two patterns. The first pattern that we have is this massive M formation. The second pattern that we have is this minor overextended M formation. Now, after an overextended M formation, what you want to see, so the completion zone of an overextended M formation is the 0.382 of the Fibonacci taken on the impulse to the downside, so on the leg that created the overextension in the market. And this is valid in general. In general, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. So what we expect is for the market to create a move to the upside to go and complete the pattern exactly at the 0.32 of the Fibonacci taken on the impulse. So in this specific case, if we go back to the current situation that we have, if we want informations on this move to the upside, we have to take our Fibonacci on this move to the downside. So from this high to this low. And what we can see is that currently the market is about to approach the 0.32 of the Fibonacci taken on this impulse to the downside, creating the first completion of this overextended M formation. Now, overall, you can even expect a deeper correction to go and test this previous support, not the resistance, but the 0.32 is the first level that you expect the market to reach. Going down on the daily time frame, what do we have? Now, on the daily, we had spoken about this pair quite a few times. We spoke about Euro NZD after the market had created this W formation, and I made a full breakdown of Euro NZD exactly when the market was here, explaining all the reasons for which from here first, we wanted to see a move to the downside exactly to this area, and when the market was here, I made another breakdown explaining all the reasons for which from here, we wanted to see the market create this move to the upside. And again, that is exactly what the market did, and we just capitalized on this move to the upside with students for a beautiful 1 to 3 risk to reward to the upside on this pair. So for those of you that believe that this trading week is not the best trading week to be involved in the market just because it's the Christmas week, it means nothing. In fact, with students, we are still trading also this week. Now, what you can do if you want is maybe reduce a little bit your usual risk per trade, but it's still good conditions in the market, and we just capitalized on this move today with a very good risk to reward to the upside. We had a 1 to 3 risk to reward on this trade. Now, at the moment, what we have is that in creating this move to the upside, the market has just completed this overextended W formation. Now, by the way, I forgot to say it, All the previous analysis that I have just shown you is all linked in description. So the previous analysis for Euro NZD is linked in description, so you can go and check it out for further reference, and more free education is all linked below. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. Now, as I was saying, in creating this move to the upside, the market has just created another overextended pattern. In this case, it is an overextended W formation, which is basically the opposite of an overextended M formation. And again, also in the case of an overextended W formation, you want to see the market create a move to the downside to complete the pattern at the 0.32 of the Fibonacci, taken in this case from the low to the high of the impulse, since it is a bullish impulse. Now, before I show you how we will be approaching this opportunity for a short on Euro NZD, let's first go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. Now, starting from the Euro, what we can see is that with the last report, hedge funds have opened 10.7k short positions and closed 3.8k longs, decreasing the net positioning from 156k to 141k, increasing the short exposure from 9.7% to 11.7%, and when it comes to long exposure a little bit increased, but overall we can see that the positioning has shifted to the negative side a little bit more, meaning that we can expect the market to show some short-term weakness on the Euro given this massive amount of shorts getting added and longs getting closed. On the NZD, what we can see is that with the last report, hedge funds have again increased the net positioning, but there is one very important thing to notice. We had spoken about already in our last analysis of Euro NZD of the fact that we had 34.7k long positions on the NZD. Now, this is one of the highest values that we had in the past, which means that we are basically at an extreme in the market. And even though 34.7k long positions can be easily achieved by hedge funds, anyway, at some point they will start taking their profits on the longs, which is what I said when we had this value. And in fact, look at what happened. Longs got decreased from a 34.7k to 28.7k, which is exactly what we expected, some institutional profit taking on all the longs that we had. So the NZD is currently getting weak. We are still strong, but some profit taking started. The Euro can show some short-term weakness. So there is definitely the possibility to see this overextended W formation complete. However, as usual, monthly, weekly, and daily time frame are the best time frames for the direction of the market combined with the COT data. But the best time frame when it comes to confirmations and entries, that is the 4-hour time frame. And at the moment on the 4 hours, we can see that everything is absolutely bullish. We have extremely strong bullish momentum, and until everything will remain like this, the market will easily continue to the upside. So can we be looking for a shorting opportunity yet? Obviously not. Everything is still bullish, and until it will remain bullish, it will be even better for this opportunity. Why? Because the more the market will continue to the upside, the better the risk to reward and the amount of pips that we can be capitalizing on in the move to the downside will be. So the more it goes up, the better it will be. Because anyway, with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And if the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point we will be adding Euro NZD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good probability and very good risk to reward at that point for the move to the downside, for the market to retrace at least to the 0.32 of the Fibonacci taken from the low to the high of the daily impulse. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. Is a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.